Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature. Look at now at the September contract. Last print of a 1078 even on the market. As you can see, we got a gap lower on this Friday, the 11th day of June. And certainly filled the gap and went on to retest the highs of the prior day, as you can see right there around 1083 to 1084. Put in a little bit of a double top there, just couldn't make it past the highs of the prior day on the market. But why couldn't it make it? Well, look at our indicators right here. We have bearish, 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 and certainly bearish and certainly diverging. So we had a lot of bearish indications supporting this bearish gap. So essentially what it was an overshot of a gap fill and retest of the prior day's highs. Very textbook move, and certainly we're right in the crux of the day's trading range right now because the market just simply cannot decide where it wants to go. We have extreme short-term bulls battling overwhelming bears. So the bears will certainly, as we remain officially from our official market timing perspective, bearish on the market, are certainly in control of the market, generally speaking. But we're looking at the last print at 1078.50. Not really any trades from this vantage point right here, except for perhaps a short around 1078 to 1080. Definitely want to stop that out around 1085. So a nice short around 1078 to 1080. Go ahead and target probably at least the early session lows around 1072. So you're looking at 6 to 8 points on the S&P. And so that'll be the trade setup from an intraday perspective. But should we break above the highs? I don't know. We've got just mixed indications here. So again, this would be probably out of 5 stars, be about 3-star trade, given the certainly the mixed bias. But we'll go ahead and put that out for you. Now we're going to look at a chart of the, well, actually let's just go back a little bit and see how our proprietary indicators have suggested. As you can see right here, we have a beautiful double bottom hybrid inverted head and shoulders formation right here, and a nice divergence amongst our indicators suggesting this bottom would likely be a bottom, and certainly it was. Had a nice run up in the market, but definitely just waned on the 9th day. Let's see, what was this, the Wednesday? Definitely just waned into the close. I don't know where that came from. We were full all out bullishness. We did have some bearishness here, sliding into bearishness, but definitely an errant sell signal, or certainly sell bias we had on the late day Wednesday. As you can see, that was quickly eradicated on the early session of, oh, I remember what this was. This was just simply the retest of the 10-day exponential moving average, which we'll look at in a second on the daily chart. Just retested, or went up to retest the underside of the 10-day, came down. Bears wanted to go ahead and get in early. It just wasn't to be. That's why we're just walking along this 1080 level. As we've mentioned in the yes, the market loves the 1080 level and 1040 level. We're going to go ahead and look. Let's see. There's our Evo. Look at the beautiful trades from the Evo lately. Just insanely beautiful trades for the Evo. Actually, this is the Evo. This is not the one. This is the one that most people trade. Unfortunately, it has a trailing stop. It just jumped out. But this is our traditional Evo, which houses, this is our long-running Evo, which houses incredible profit potential. Look, as you can see, these beautiful winners right here that the Evo WS, we call it, has been putting up. And there's the Day Trader 10.0. Look at that beautiful trades right there. But what we're looking for, there we go. So we've got our official market timing. We remain officially bearish on the market. Went to bearish at 11:58, as you can see right there on the break below. The convergence of trend, essentially, and definitely a continuation move of this declining head and shoulders formation on the daily chart, but certainly remain officially bearish. 11:58 was the call, now 10:82, so about 75 points or so on the market, 70 to 80 points, we'll call it, in profit. Now, we're not closing that out. You do see a profit bar right there, a profit line, but we're not closing it out, although we do have the potential for a double bottom. The market is simply bottoming very nicely off this 1040 level, essentially a triple bottom. And this is a little bit higher, so it could be an inverted head and shoulders formation right there. Right now we're above the trend, so we've moved our 20% bias, we're above the short-term trend, to neutral, essentially. Not really bullish yet. Need some more impressive action. Certainly a break if we hold this quiet session today, break above the highs on Monday to suggest bullishness from a short-term perspective. But certainly we need to get above 1100 for any kind of confidence on any bullish move. Probably will jump out of our bearish exposure around 1100 or so. We'll see. Problem is, we've got our key measure of trend following support resistance coming down right around 1120, so that really makes a 1080 1120 area just essentially as a neutral patch, a neutral zone, a zone of neutrality. But from a directional movement perspective, certainly have lost, the bears have lost all control of the market. They've moved to gray status in terms of short-term and intermediate term as well. Short-term bullish actually is the case in terms of momentum. Intermediate term bearishness has lost its influence as well on the market. So right now we're going to hold with our official bearish bias on the market, 1158. Look for a continuation move lower to actually below 1040 as we head into the summer season in the fall. Certainly a move up to 1100, 1120 would be a good opportunity to get into some short side exposure, but we'll wait and see, gauge the dynamics of the market as it were once we do that. So how have our systems been trading this volatility? Well, MACD version 4.0 HR again Thursday, yesterday, blasts another 15% higher to cap off a run of 65.7%, and that's just in the last 9 days. As you can see, the gains just simply continue. $3,750 was the gain. This was the 10th of June, and these are kind of our top three, or just actually some top 3 day traders, I believe. But as you can see, the MACD version 4.0 HR, and of course the MACDTS version 4.0 HR would have the same. We actually don't track that, but certainly would have the same. It's essentially half this exposure performance, 66% in just the last 9 days. That's a gain of 16,425. I think it's up around 100% over the last 30 days or so, with a gain of about $20,000 to $25,000, as you can see over the last few days. So this portfolio really handling the current market environment well. As you can see, lost $27.40 on Wednesday, gained $11.40 on Tuesday, dropped $150. This was impressive. Gained $4,235 last Friday, and then just gave back $150 on the following day. Isn't that amazing? $1,080 was the loss on the Thursday prior. $58.95 was the gain on the 2nd of June. $17.70 was the gain on the 1st of June. Just a $395 loss after a $4,000 gain on the coming in the end of May. So we essentially have a special on this portfolio. If you'd like to auto trade this portfolio with full automation, you can essentially save 20% on the portfolio. Just go to the home page and click on either. Well, actually, any of our portfolios essentially are 20% off right now. Enter promo code VIDEO for watching this video. So you just go ahead and click MACD version 4.0 HR, and just go ahead and add that to cart. It's $25,000 portfolio, and we'll just delete these and enter promo code. So that's $2,500. You get 3 months of trading for that. Enter promo code VIDEO. You can save $500 every 3 months. It's continuation, $500 every 3 months. So just $2,000 to trade this portfolio. And as you can see, just yesterday it made almost twice that, and certainly it's made many times that over the last 9 days. So very aggressive, very profitable portfolio. Excuse me. And what's more, if you enter quantity of 2, go ahead and apply that, you'll still get the savings, only $4,000, but this will give you an entire year of the portfolio. And what's more, the broker will pay you back that $4,000 in every quarter. You'll get a credit to your account up to the amount that you paid per quarter, so $2,000, to pay for your subscription. So it's just a beautiful, you essentially trade for free. If you have any questions, go to the website, chat with Support Team Live at www.MiniAnalyst.com, or shoot us an email to admin@MiniAnalyst.com. And if you have any questions about anything, just let us know. We'll see you next time.